Hi, folks. Today is Friday, August 7th. It's the end of a week. This has been a little bit of a challenging week. We've been in a period for a few days of some real severe choppiness. What we discuss in our live trading room is where we're at in wave counts, what price targets we are headed for. That helps us know when to hold longer. It helps us know, kind of have a sense for where the price might be going. Those wave counts have shown us to be in a pretty choppy pattern most of the week, and it's been reflected in our overall performance. So there's a couple of things. I'm going to share some numbers with you here. There's a couple of things that I take away from that. It's a more challenging week than we've had in other weeks, but the adaptive entry system, which is what we primarily focus on, has actually held up very well. So we have some loss today. We had some smaller losses earlier in the week, but overall, the adaptive entry system still proves itself to be extremely valuable, not taking huge losses because we're following the signals, and it interprets what the market is wanting to do. And sometimes the reality is with trading, you're just going to be on the wrong side of a market move. We are primarily focused on the NASDAQ 100 futures chart. You can trade that NASDAQ 100 futures chart using options, buying calls, buying puts, or you can trade it using futures. We also, in our live trading room, show the Russell 2000, and we also show the S&P 500, both futures. Now, what's been interesting the last few days is the Russell 2000 has shown some really nice movement, some nice patterns as opposed to the NASDAQ 100. So I want to be really clear here. We don't limit our trading only to the NASDAQ 100, but we use it as an example to demonstrate how to interpret the adaptive entry system signals. And if you're not familiar with what I'm talking about, the adaptive entry system signals, let me broaden this out here a little bit, consist of 4 entries, really 3 primary and a secondary entry. The entries are going to show an M for a momentum signal. If it's highlighted in green, it means we're going to go long, or as an options trader, you're going to buy a call. If it's highlighted in red, it's going to be a short signal, and you're going to go short or buy a put. So we have M's for momentum signals, we have C's for consensus signals, and then we also just take a look at the color transition in the bars, in the price bars. So here we had a bar that closed red. It was the first red bar after a series of blue bars, and so our entry, which is a trend bias signal, is on the open of the second red bar, and you can see what happened with that. It had a really nice movement lower. Our movements to the upside are when we have a blue bar that closes, and it's the first blue bar after a series of white or red bars, and the second bar opens blue. That's a signal to go long. You can see here that we had some nice movement to the upside. So those are the 3 primary signals. And then when you're in a long trend, declining trend like this, if you've already taken yourself out for a profit, that's when we refer to this pattern right here, the Cycle Finder Plus. The Cycle Finder Plus has 2 lines, a blue line and a red line. When the blue line crosses below the red line and we are in a short pattern, we can re-enter that short pattern. That's what's called a continuation trade. If we're in a long pattern, long trend, and Cycle Finder Plus crosses up after we have already taken ourselves out of the trend and we've taken a profit, we can re-enter the trend and go long again. So between the trend bias signals, which is the color transition, the momentum signals, and the consensus signals, as well as the continuation signals, it gives us a lot of potential activity during the day. So what we do at the close of each day is we take a look at our performance overall. So I track a lot of detail here, and those of you who are familiar with the tracking will see that there's some empty spaces here. That's because I'm just keeping track over here of continuation signals, and we are in the process of automating that as part of our overall measurement. So continuation signals, the cycle finder plus cross is something we talk about in the adaptive entry system training and also in our futures training education course. And I'm just keeping track of them here now so that we can incorporate them into our formalized tracking, hopefully starting next week. So if I take a look at our daily summary, the two primary categories that we track are the 7 a.m. to 4 p.m. time frame, taking only the trend bias signals and looking for 10 points of profit. Now the reality is in the last few days we've been locking in at 5 points of profit just simply because we weren't seeing a substantial follow through. So our performance on that is actually negative 57 points today. Now on NQ it's $20 a point, so 57 times 20 is $1,140. So we're going to jump over to our personal trading plan, and we fill this in at the end of every day, and it is something that I think is absolutely imperative that every trader have this tool, fill it in at the end of every day, no matter how good your trading day was or how challenging your trading day was. Fill it in every day and see where that forecasts your potential profit over the course of 12 months. This whole tool is designed to be able to show you what you can make over a 12-month period, and it allows you then to separate yourself from a lot of the emotional anxiety that exists when you have a down day like today, or the maybe unreasonable euphoria that's associated with a super strong, profitable, productive day, because then you kind of get it in your head that this is the way it's always going to be. The reality is with trading, there's always going to be a balance. I'm more concerned about what my 12-month forecast is based on my current run rate and what my overall averages are than I am any particular day. So I've already filled this in here. So we traded 3 contracts. One of the things that the trading plan here will do for us is it helps us understand how many contracts to be trading as our account grows. So we're starting with $5,000 in the account. We're allocating 10% of the balance of our account to contracts. Each contract requires $500 of margin. So if I have $15,000 in the account, that 10% of that would be $1,500. That means I could trade 3 contracts. Then we limit the number of contracts to grow. We limit the growth of the number of contracts, otherwise it'll just continue to grow based on 10%. And that limitation is based on what your own personal bias, personal preference is. For the way we've been planning, we're limiting our growth to 3 contracts. We may change that going forward, but for now, it is set at 3 contracts. All right, so back to our performance number today. So our actual dollar amount today was down $3,420 based on 3 contracts. And we took 11 trades, 3 contracts per trade, so that's 33 contracts. And that 33 then incorporates expenses into the whole equation here. All right, so what did that do for us? If I take a look at the last 5 weeks, now it's been 5 weeks since we introduced the whole concept of incorporating the trading plan into your trading and closing out every day, filling out the trading plan. If I take a look at the last 5 weeks, we're averaging 21 points a day. But this is where I'm going to differentiate now. I haven't done this before because it hasn't mattered that much. That 21 point average is based on taking into account all winning days and all losing days. So what I'm going to do is I'm going to separate it now. And this just requires a little bit of math from me, no big deal, but I'm going to separate it. When I take a look at my losses, I have 5 losing days. There's 1, 2, 3, 4, 5 losing days. The plan calls for an average of 1 losing day a week. We've been through 5 weeks, so we are really right on plan. But the second part of that I want to take a look at is what is the average point value of my losing days? Now today was a pretty healthy losing day. It was the biggest losing day we've had in 5 weeks. So I think that that's a real testament to the integrity of the adaptive entry system. So I took a look at the losing 5 days, and they actually average 15.35 points a day. 15.35. We've been planning for our future forecast at 10. So what I'm going to do is I'm going to adjust the reality of my forecast, and I'm going to say 15.3, and I'm going to assume that going forward that my losses are going to accumulate at the same run rate that I've already accumulated them. All right, let's plan for losses, folks, because that is a reality of trading. Let's plan for them. I know that they average 15.3 now. Let's plan that they're going to average 15.3 going forward. And if that changes, if it increases or decreases, we can adjust that number so that we're constantly tweaking our forecast to have the most realistic income forecast possible. Now, the other side of that coin is this 21 points a day is taking into account all wins and all losses, and it's blending it all together. On the winning side, if I take a look at just the average of the winning trades and exclude the losing trades, because I've already factored in the losing trades, I'm averaging 30 points a day, okay? So I'm going to change my positive forecast to 30. I changed my losing forecast to 15.3. I'm keeping my maximum number of contracts at 3. I have a realistic forecast based on what I've already accomplished in the last 5 weeks, and that tells me that having started out with $5,000 in the account, that over a 12-month period, I could potentially see profit earnings of $318,000. So when I see that, it just tells me, okay, today, tick by tick, trade by trade, didn't really feel very good. But the reality is it's one day in a scheme of 12 months, 52 weeks, 5 days a week. It doesn't matter. It really doesn't matter. Take that out of the equation. If you're hyper-focused on one losing day, you need to figure out a way to move beyond that. And my way of doing that and my counsel to you is do it via the personal trading plan that puts it in context with what you've already accomplished and forecasting what you've already accomplished out for the remainder of 12 months, allowing you to see where that gets you. So you know what? I don't feel very bad, actually, considering the forecast is $318,000. Well, and if I wanted more, this isn't about being greedy or more. If I wanted more, because I know that the maximum number of contracts that the personal trading plan will tell me to trade is based on no more than 10% of the current balance of my account. If I'm okay with that, then I might feel comfortable saying, well, I'm going to increase my maximum up to 4 contracts, and all of a sudden that dramatically changes the potential income for 12 months. I'm going to leave it at 3 because any way you slice it, we're 5 weeks in to a 52-week track. We started with $5,000 and we have an income projection with a very conservative forecast of $318,000. I think any way you slice it, that's pretty rock solid. So I won't go through as much detail on the other category, but we do track 2 categories. The other category is when you're trading only from 9:30 to noon and you're taking all of the signals. Remember, this one was 7 to 4, taking only the trend bias plus signals and holding for 10 points. And I said this week we adjusted to locking in 5 points just because we saw very choppy patterns and we didn't see the follow through. But we made that real-time adjustment in the live trading room. So 9:30 to noon today, taking all the signals, trend bias, consensus, and momentum signals, it came up to minus 45 points. So we're going to jump back to our trading plan and we're going to go to the all. I already have this number filled out here. So it was a loss of 2,700 today, 33 contracts because we're trading 3 contracts and there were 11 trades. So I did the same calc in terms of separating between now average losses and average wins. And the average losses we're allocating, we're assuming that we're going to lose an average of 1 day a week. And we have accomplished that. Today was a bigger loss than what we've experienced before, but we factor in today, and the average of the losing trades is 15 points. So I'm going to be realistic in my forecast. It doesn't do anybody any good to fool yourself. Just use your actual metrics and your actual performance, your actual run rate. And I'm going to use 15 points because that's my actual. And then for my winning trades, it's actually averaging just slightly over 29 points. So I'm going to adjust to 29 points. Now my actual average when I blend everything together is just over 20 points. This is realistic based on the average of the wins and the average of the losses. Again, I'm keeping it maxed out at 3 contracts, and I've got about a $307,000 potential income. So again, today was one of those days, where you just felt like you worked too hard for no production. But it's one of those days that's a reminder that says, listen, these days are going to happen. We anticipate these days on an average 1 day a week. I'd like them never to happen, but if they're going to happen, let's put them into our forecast. Let's make sure that we are realistic. And as of now, the close of 5 weeks, we're separating the averages. So we're going to continue to monitor that. And maybe at some point, we'll blend it back together. But right now, it's very realistic for us to assume an average run rate on winning days of 29, because that's what we've been averaging, and an average run rate of losing 15 points on losing days, because that's what we have been averaging. Once again, you can change the maximum number of contracts to anything you want. It's up to you personally. It will all be limited by being no more than 10% of the balance of the account, which I think is ultra conservative anyway. So, maybe you want to put 5 contracts in there. It won't grow to 5 until the account value is large enough that 5 contracts at $500 of margin per contract, $2,500, that the account is over $25,000, because it needs to be no more than 10%. So you can play around with that number. I think that that's a very powerful tool right there. Once again, we walk away, hey, it wasn't a great day, it didn't make me feel very good, but I can plug it in and I go, listen, I've done really well over the last 5 weeks. This is you talking to yourself. And if I continue this run rate, including losses like this, on an average, 15 points, 1 day a week, I am on a pace to potentially have a $300,000 income over a 12-month period. Okay, last thing I want to just share with you here is we're going to take a look at some averages. So these are averages that show in those categories the all signals for 10 points, 9:30 to noon, what that average is. So across all of the time that we've been tracking here, it's averaging 28.6 points a day. Well, 28.6 points a day when you're trading NASDAQ futures at $20 a point is $572 a day on an average for 1 contract. If you're trading 3 contracts, you're at $1,600 and more, $1,600 a day. So that's the power right now of looking at the averages, using the trading tool, the personal trading plan, to plan going forward. And we're going to continue to track this in the live trading room so that you have a good sense for where you're actually performing. And then in our 10-point plus, or 10-point profit target with trend bias only, we're averaging 34.5 points a day. So $20 a point on NQ, 34.54 times 20, that's $690 a day. We're up to 3 contracts. Remember, these are averages, folks. So that's an average of $2,000 a day, over $2,000 a day. So when you take a look at your personal trading plan, and then especially on days like this, and I would encourage you to do it every day, take a look at what the overall averages are. I think it kind of quiets some of those emotions that traders are so susceptible to, losing perspective on how you've done to date and only focusing on what today looked like. So that's the summary for the week. We certainly appreciate those of you who are here in the live trading room with us being here. And we also appreciate any of you who are just kind of looking at the adaptive entry system and thinking about coming into the live trading room. Appreciate you looking. We'd love to have you. We'd love to help you. We try to teach throughout the day and help you really understand how to interpret the signals.